There's a growing sense of unease rippling through the corridors of power in Washington, D.C. It's a feeling that the war against inflation, a battle that once seemed poised for victory, has become mired in a protracted stalemate. The latest economic data suggests that the Federal Reserve's efforts to tame rising prices have hit a frustrating impasse, and the path ahead is littered with tough choices and lingering uncertainties. The Personal Consumption Expenditures Price Index, the Federal Reserve's preferred measure of inflation, is expected to show that price pressures remain stubbornly high in March. While the headline number may accelerate slightly due to rising energy costs, the core measure, which strips out volatile food and energy components, is projected to rise by a concerning 0.3%. This steady upward march of prices, even as the Fed has aggressively raised interest rates, is a sobering reality check for policymakers. The message from the data is clear: progress against inflation has stalled, and the Fed's battle plan needs adjustment. In the words of Federal Reserve Chair Jerome Powell, it will take longer for the central bank to gain the necessary confidence in a downward trajectory of inflation before considering rate cuts. This shift in tone signals a willingness to keep interest rates higher for longer than previously anticipated, a strategy that carries significant economic risks. While the inflation numbers may rattle markets, they are just one piece of a complex economic puzzle that Fed officials must navigate. The coming week's data releases will provide further insights into the state of the economy. The government's initial estimate of first-quarter growth is expected to show a cooling from the previous period's robust pace, but still running above what policymakers deem sustainable in the long run. This delicate balance between growth and inflation control will test the Fed's policy acumen. Meanwhile, personal spending and income data will offer a glimpse into the resilience of the American consumer. Despite healthy job growth, there are concerns that persistent inflation and higher borrowing costs could eventually weigh on household outlays. Income growth is also forecast to accelerate, potentially providing some respite for consumers grappling with rising costs. Beyond the domestic front, the global economic landscape is equally complex. The Bank of Canada's summary of deliberations will shed light on the debate among officials about what conditions they need to see before cutting rates, mirroring the Fed's own internal deliberations. Retail sales and inflation data from our northern neighbor may confirm signs of a consumer slowdown at the start of the year. Across the Pacific, the Bank of Japan will deliver its latest price forecasts, just over a month after its first rate hike since 2007. While the central bank is widely expected to keep policy on hold, economists and investors will scrutinize the forecasts and the BOJ's characterization of inflation risks for any hints on the pace of future rate hikes. The continued weakness of the yen adds another layer of complexity to the equation. In Europe, the European Central Bank President Christine Lagarde will deliver a speech at Yale University, extending her U.S. visit after the International Monetary Fund/World Bank meetings. Her comments, along with those of her colleagues scheduled to speak in the coming days, will be closely watched for insights into the central bank's policy outlook. The Eurozone's economic health will also come into focus, with key releases including consumer confidence, purchasing manager surveys, and the ECB's Consumer Expectations Survey. Germany's Ifo Business Sentiment Index, a closely watched barometer of Europe's largest economy, will provide a glimpse into the region's economic trajectory. Across the Channel, the United Kingdom will see a flurry of economic data releases, including purchasing manager surveys and public finance figures. Bank of England officials, including Chief Economist Hugh Pill and policymaker Jonathan Haskell, are set to weigh in with their perspectives. As the global economic landscape grows increasingly interconnected, the actions and decisions of central banks reverberate across borders. From the Swiss National Bank's annual general meeting to monetary policy decisions in Hungary, Ukraine, Turkey, Russia, and Botswana, the coming week promises a flurry of policy announcements that will shape the trajectory of inflation and growth across the globe. In Latin America, inflation data from Mexico, Paraguay, and Argentina will influence monetary policy decisions, while Brazil's central bank survey of analysts will provide insights into inflation expectations amid the government's proposal to water down budget targets. As I reflect on the economic challenges facing policymakers, I'm reminded of the words of former Federal Reserve Chair Paul Volcker, who famously quipped, The only thing that's inevitable is that nothing is inevitable. The battle against inflation is far from won, and the path ahead is fraught with uncertainties. Yet, it is in times like these that the resolve and wisdom of our economic stewards are put to the test. The Federal Reserve, and its central banking counterparts across the globe, must navigate these choppy waters with a steady hand, balancing the delicate interplay of growth, employment, and price stability. The stakes are high, but so too are the opportunities. By charting a course rooted in data, discipline, and a commitment to long-term economic stability, we can emerge from this crucible stronger and more resilient. The journey may be arduous, but the rewards of a stable and prosperous economy are well worth the effort. In the end, the stubborn grip of inflation may prove to be a formidable foe, but it is one that we must confront with unwavering determination. For it is in the crucible of challenge that the true metal of our economic institutions is forged, and the foundations of lasting prosperity are laid.